Let's be real. Credit can be a heavy weight. It can be overwhelming. But what's even worse than that is your credit score. Because if your credit score and your credit profile is not in order, it can be detrimental and it can put barriers in front of you from making any financial decisions to allow for you to get some traction in your life. Let's talk about how you can not only pay your debt down, but also build up your credit using cash value insurance. That's what we're going to be talking about today. I'm Lonzie Greene, affectionately known as Mr. Flip Your 401ks. I help people build holistic financial strategies using their retirement plan, their cash value life insurance to pay off debt, become investors, get paid for life, and retire comfortably. Welcome to From 401k to Freedom. Let's talk about the link between debt and your credit score. You have three things to consider. You got your credit utilization, which is how much, based on what you have been afforded to use, how much of your credit are you using? That's your credit utilization. For example, if I have a balance of $10,000, available balance of $10,000 on a credit card, how much of that am I using? Am I using the whole 10? That's the utilization. Then you have your payment history, meaning, am I making my payments on time? And when am I making my payments? That affects your credit score as well as your utilization as well. And ultimately, your debt to income ratio, meaning based on the amount of money that you're making, the income that you're bringing in, how much debt do I have? Is my debt swallowing up all of my income, or am I managing my debt in a way that my income that I'm generating is more from a ratio standpoint than what my debt is? So those are three factors that really impacts your credit score. For me, as far as when I got to a place where my credit score wasn't where it was, I can vividly remember back in my early to mid 20s, my score was in the sixes. I had to think about some things that I could strategically do in order to lower my debt to income ratio and also improve my credit score. And so one of the things that I did was map out a strategy. Now, again, we talked about this in previous episodes. You can go about paying your debt in a myriad of ways. For me, I like to pay off my lower balance credit card or my lower balance debt first and then work my way up. But you can always start by paying your higher interest rate debts. So just think about what approach that you want to take. That's your strategy. And then after I focused on my debts and came up with an approach and a strategy, then it was like, okay, well, how am I going to go about paying this debt? And at first, the way that I used to approach debt, which is different than the way I approach it now, was stockpiling my cash. So meaning just paying my minimum payments at first and then letting the extra income build up in my checking account. And then from there, I would pay off my lower balance debt that way. But now with cash value insurance, I do things differently. I actually take the money from the cash value policy and I get out of debt that way. I pay off my smaller balance debt, pay that off, and then I take the money that I'll be paying the credit card and pay that back to myself. That's what I do. And that's what I've done. And it's worked tremendous for me. So I'm going to go into some actionable steps for you all. So the actionable steps are as follows. First, you want to focus on your debt. Come up with a strategy, come up with an approach. Second, you want to make on-time payments because any missed payments, any late payments can affect your credit score. Then you want to use and leverage the vehicle of the cash value to borrow again from it and pay off your debt. And then monitor your progress, meaning, okay, what interest rates am I paying on my credit cards? How much am I selling out in dollars for interest? And then determine whether or not you want to tweak your approach, change it. Maybe you want to go to the next higher balance to pay off. Maybe you want to create a timeline for yourself, whatever the case may be. But monitor your progress so you know what strides you're making and be able to make revisions when and where and however you see fit. So if you want to learn more about how you can build your credit score while paying your debt down at the same time, feel free to get more details by clicking on the link and getting the book, The Value of Cash Value. Or, hey, you can always connect with me one-on-one. I love to map out a strategy with you to see what we can do to get you out of debt quicker and continue to build momentum on the growth of your money. Until then, take care. We'll see you again.